Good morning, traders. It is 7:27 on a Monday, the 29th of January, and my glasses are really dirty. Hope you all had a great weekend. Relaxing, fun. I did nothing on Saturday. I usually still wake up at 5, look at some markets a little bit on Saturday still, but or my wife and I do some house projects. But we did nothing. I felt lazy, but it felt okay. You can do that. It's okay to be lazy every once in a while. Looking at today and what we have going on. Well, if you didn't notice, overnight, I did put some trades on the alert page. On the signals, I had the Aussie dollar pair short at 81.04, the dollar yen long at 108.72, the pound dollar short at 141.55, and the New Zealand dollar short at points at 73.6. Actually, I haven't even really looked at how those panned out, but I know we have Fridays on here. What do we got coming up today for news? We're going to have the Consumer Core PCE Index, personal consumption. That's coming up month over month. Just kind of a slew of things, and then that's at 7:30, and then at 8 we're gonna have the Dallas Fed's PCE. We're gonna have manufacturing at 9:30, and then at 10 o'clock just some commodity reports. Later on, we're gonna have the Eurozone consumer confidence at 4 o'clock Central, and then the Eurozone business sentiment. I gotta see, we got some numbers coming out right now. So we've got as expected, personal income or personal consumption expenditures were higher than expected, better than expected. Still lower than the previous, but that's all right. Okay. And going into the week, we'll have more normal kind of news coming out. All right, let's look at our trades from Friday. So we had gold short at 1353.22, and so let's just where are we at? 1353.22. Right, 13532. So there was we went short here on Friday, and that trade is working out nicely. Remember, our bias for taking this trade based on this chart was we had a head and shoulders formation going on the 25th, and then we were looking for a break, which we got here, but then we were looking for kind of on this Gann angle, we were looking for some rejection higher, and so we've got a really nice move of respecting this particular angle as our slope, and we've also got this steeper angle being respected as well. So again, the Gans Law of Angles is that when a angle is broken in time or price, it will move to test the next one above it or below it. So if we move across in time or we move above, we're going to test this angle again. Or otherwise, if we stay below, we're going to test this angle. And this is I believe that is the 45 in our square here. It looks like it. I don't think that's a trend line. Is it a trend line? I might have drawn that as a trend line. Let me take a peek, make sure. Yeah, that is a trend line. Let's get rid of that. But even if we look at our daily, we are looking a little roundish and a little top heavy up here. This is a pretty good sell signal. This angle here on the daily that we've broken is very, very important. Notice, where's the next angle on the daily? It's all the way down here. It's all the way down at 1232.3. It'd be weird if we dumped all the way down there, but that is the next angle below us. However, if we're going to kind of have a more of a realistic viewpoint here, even though that is realistic, we could be looking at kind of a consolidative or distributive trade, you know, kind of down. Our first area of support in gold here is going to be at the 1337.190 zone. Just be careful of that. You know, actually, the lower from here and lower, we should find some supportive area from buyers. But again, you know, over the week here, I'm looking at a bias of some profit taking and some moves down. I'm going to get into the time cycles again because those are going to be very important for the week. But let's just keep going over these trades. So the euro trade, we wanted to go short at 124.20 on Friday. 124.2, which is right there roughly, 124.2. Okay, and so far that trade is working out nicely. I like the volume on this so far. We are at 7:30 a.m. and we are you know, about halfway of the volume that we were on Friday, so that's pretty healthy. This top here is pretty bearish looking. Also, our square here, we are we rejected this angle. We rejected those higher prices. In fact, if we look on here as well, if we have our square of 144 within our square, we are looking at some further movement down. So the next angle in our square of 144, our Gann angle here, the next area we are looking at is the 122.82 zone. All right, on the euro, it did not find support at this area. This is the 50% line in Fibonacci in our Gann square. We are coming up to the end of a actually we are at the end of a time cycle in our trade here, but you know, we could be starting our next corrective move if we're looking at this as a 1, 2, 3, 4, 5 move. Again, I'm not the biggest Elliott fanatic, but it does. Elliott tells me kind of where something may go, or like how far something may go, not where it may go. Gann tells me where it will go. Elliott tells me how far it will go to get there from where we're at. All right, so that euro trade still looking really nice. The dollar yen. This is a interesting area. It doesn't look so great over here because I didn't put a lot of structure, but oops. The dollar yen, we are finding a lot of support below here, mainly because if you look at the dollar index, we are finding a lot of movement up. In fact, I don't know where. I thought I had some structure. Yeah, right here. We've got a clear supportive buying areas on our oscillators on the daily. So we should expect some swift movement up. Whether that's going to be just a pullback remains to be seen, but I'm going to get to those time cycles here because I think that that's a strong possibility of actual reversal. Back to the looking at the dollar yen. If we can regain and hold above this value area, this angle here, if we can get into the 108.96 zone, that would be fantastic. I don't know if I have a Gann square on here or not. Gann box, rather. I do? Yeah, that's a longer term, wasn't it? Yeah, it is. You know what? I don't like how that is. There we go. Now let's bring us back in. All right, so that's pretty telling. We've got, so we broke below this angle. Now, again, if you've been with me for a while, I have not. I don't know when we last looked at this Gann square of 144 box on here, just because it was obeying this structure so well. But if you look back in videos past, you'll see, if you can find it. I know I've had this square on here. This call it a Gann box, square of 144. It's been on there for months. It has not like disappeared. I just hit it because sometimes it looks noisy. But so we have kind of tested this angle. We've tested this angle below here. And we have found some support off of it. What we really want to see is we want to see some supportive buying back into this area. We want to come back into the 108.96 area. So essentially we're looking for 190. And we were long on Friday at 109.57. I think we wanted to get there because it doesn't look like we actually... Right, we didn't actually get there. We wanted to go long if we reached it, but we did not reach it. That is still... active. I also yesterday or last night I went near the open, about 15 minutes after the open. I had long at 108.72. That is still okay, but if you're aggressive, that's fine. If you want to wait, if I want to wait, I'll do that up here. Let's look at, then we had, let's see, the other short we had was New Zealand dollar at 73.31 on Friday. We wanted to be short at 73.31. Ooh. So that's still in play if we can get down there. Actually, we didn't actually get down there, did we? That was another one. We wanted to trade below it. Although last night I put a trade in for being short at 73.6 up over here overnight. So that is still working. It does look a little weak. Doesn't look like we're getting a lot of supportive buying. We may want to test lower here. The fact that we did not move up and test this other angle above us means that we probably have a false break of this angle, so we should see a return back down to it. We are below these longer trend lines, so that is we're going to be bullish if it returns back up, but for the time being we're bearish on that because we are below it. We've been below it, tested it, bought it back up, tested below again, bought back up, but lower highs. And now we have been trading below it for the last, ever since 7 o'clock last night. For the last 12 hours, we have been trading below. We had the pound, or let's see, the euro pound on Friday. We wanted to continue to hold our short at 87.65. That would have hit our in profit target because we were short on that since, where are you at? 87.65 on Thursday, which was the 25th, I think. Thursday the 25th. Yeah, we went short here, and continued to hold. I don't know if it was this pair or the other, moving your stop so that you're in profit or even or take profit. But either way, your stop was either probably hit, or you took profit early, or you ended up neutral on the trade if you move your stop to break even or a little above break even. On the euro pound, because the euro is looking kind of weak all over right now, if we can get a break back below 87.70, uh, 87.70, that would be ideal. All right. Well, we do have a pretty good-looking inverse head and shoulders here. Again, I'm not a huge fan of those patterns. I think it's like chasing straights and flushes in poker. Now, let's look at the other pairs here. So, looking at gold. Pop my ears. So the gold trade, we should still look for this to continue moving down. Gonna find probably a little support here, but I think really any entry between 1346 and 1341 is a safe short with a stop above probably like where we entered on Friday, the 1353. That would be an okay area. Yeah. Euro dollar. So we are going to find some support there. Actually, I'm looking at two different areas. We've got regular harmonics here. Yeah, we'll want to have a short below the 123.59. Well, this really depends. I mean, the short overnight, I don't know why I didn't put a short trade in, but we should be safe shorting really anywhere right now. We should have some downward momentum and bias with a stop above the 50% retracement and this angle. So even short right now is a fantastic stop at and then we'd want to go long at any break and hold above 125.1. All right. Dollar yen. Going long right now. I really want it to move up more before I would get back in. I've got some trades active down here. Not a lot of exposure, but I really want to get hit up here above 109. That's trader discretion right there. Okay, Aussie dollar. All right, this guy. We were short at 81.04 last week. Still active. We're kind of getting a similar kind of a setup here. This shake is just Oh my gosh. Oh, my wife sometimes makes me shakes that are essentially blended rabbit food. Yeah. I guess it's good for you, but ugh. Okay, enough of that. The Aussie dollar is really really overextended still, and I'm comfortable going short on that still, where we're still holding our short. We really want to break of the mid here, so the 0.808 should be a good short entry. Yeah, we're fairly neutral in our oscillators as well. We are kind of just ping-ponging around in this zone for right now, but I expect to see some lower prices again in the Aussie dollar. Don't expect these prices to move back up again, but if they do, because we are beyond this angle, and if we are going to have some consolidation, it's just going to continue between 80.55 and 81.25. But otherwise, we have a good bias for moving down. This is the largest harmonic range in the Aussie dollar. This is the top of the upper range. This is a very resistive area. In fact, any of these thicker lines you see on my screens represent extremely strong support or resistance. So this is going to naturally be the hardest area for the Aussie dollar to get above and hold. So a return to the mid is very normal. We should expect it to want to test really for any move above. We really need to see some legitimacy to the price move and test these lower value areas, specifically the 78.12 area. I am short the Aussie dollar. It's a good area to be short. And having a stop above 81.3 or even higher. I mean, this is a very nice setup because we're at the end and beginning of a time cycle. We are below this angle. We just have a really great setup for a short on this pair. The two that really have the best setups are the New Zealand dollar and the Aussie dollar, the NU and the AU. So those are actually really good setups for shorts. The best ones out of the group. The pound dollar, oh, that's a really nice one too. I didn't even. Let's look at this guy. Yeah, that. How did I miss that one? Did I? We were short at 141.55 on Friday. Oh yeah, that one's still working out nicely. Because we were looking for a break of this angle. We got a break of that angle. We were trading below it on the hourly. Yeah, that's a fantastic short area because we are. So this is a resistance and a support arc, and so the behavior after we've traded above it means that we should find support on this arc, but it doesn't like we're getting a whole bunch as we go back down to it. If we re-enter the arc, if we start trading inside it, we should expect it to fall back down below. This is the 45. The pound dollar doesn't appear to have as much downside as we do with other pairs. So if we're already short at continue to hold it, and then you can move your move my stop into a little bit of profit, but kind of around break even. Euro pound, we have that trade there already. Let's get some other pairs real quick. Oh, okay. Let's actually switch gears. Check out cryptos. On cryptos, over the weekend, we actually had some nice moves. We we've been in a really tight consolidative period now for a while. Let me. Oh. So on Saturday, the lowest we got was 10,862, and then the highest we got over the weekend was 11,651. And then overnight, going into today, we've essentially kind of retraced that gap. One of the things I'm looking at with cryptocurrencies is that it is now a tradable futures product. It's a shortable instrument. It's got a derivative on the futures market, and there's a lot of debate on whether does the futures price dictate the spot price, or does the spot price dictate the futures price. You have a lot of arguments both ways, and it doesn't matter what instrument it's for. There's a lot of arguments both ways. What I'm trying to figure out, and what I've noticed is, but there's not a lot of data to go by yet, is that the trading activity that goes on over a weekend seems to revert back somewhat to the mean area of the close of Friday. So, there's a lot of opportunities to think, well, if you missed a big move over the weekend because you don't want to trade over the weekend, it seems like you'll get an opportunity to get back in that kind of trade again. So, looking at this, if we, on Friday, that was the 26th, yeah. So on the 26th, we kind of closed around, where's our close? Because they do it at 6. So yeah, right around the 10,866. So we're kind of, we just really retraced that zone back. We formed our head and shoulders here, had a movement down, and we'll see if this is going to hold as a supportive area. We are continuing to make higher highs, and just be on the lookout for that. Again, we really need to hold above we really need to hold above 11,250, and the area we really need to hold above is this 13,330. That is where we really need to hold above. It's really essential that we get there and hold above it going into our next expansive phase. Now, I want to review real quick, and then let's look at the other cryptos we have. So many different charts. Okay, so Ethereum is the crypto that has the least amount of movement, the least amount of threat down, and the most amount of opportunity to break its all-time high up. So, the most risk we have going down is a retest of the 750 area, but Ethereum has not retraced all of its movement like Bitcoin did and Litecoin did. So Ethereum is on its 45 still, so it's back into equilibrium with time and price. It blasted through really this on Friday. It went through its resistance arc just fine. So actually, we have a lot of supportive buying area down there, and then we should look for higher moves. I still have that forecast up there of getting to 1369 before 214.16, and really, if we get up there before February 4th or 5th, then I'm looking at that area. But we'll see what happens. It looks like we're getting responsive buying back in on this. If I even want to Elliott wave this thing, we've got a 1, 2, 3, and then 1, 2, 3, 4. If we could test a little lower, and then 5 should really bring us back above that resistance arc, and then we should see how that move goes. Now, Litecoin is the laggard. There is a lot of, this is just as tight ass of a range as you can get. Litecoin is a major coin, and I call anything one of the majors, kind of like the euros, the euro dollar, the dollar yen, the pound dollar, the anything that, like, it's just like the majors in euro. For me, anything is considered a major in cryptocurrencies if it is a coin on Coinbase that can be converted back into fiat or dollars or whatever your denomination is. So Litecoin is one of those. Litecoin has a whole slew of positive stuff coming out here soon. And we should see this lagging move in Litecoin come to a halt fairly soon. It should actually be very bullish. I am long more Litecoin than I am Bitcoin and Ethereum. There's just a lot of... Plus, Litecoin's a much more efficient blockchain. Bitcoin, it's good to see we're back above the 11,000. Last week and somewhat the week before, we just traded in the 10,000 value area. We may just decide to trade until Wednesday or so inside the 11,000 value area. But I want to get back to, I keep saying this. I posted these, so on the 24th, I wrote about a short. So this is January 24th. I wrote about this idea, and that I want to be short based on time and time cycles. And this is really based on Gann Analysis. And so at 7 in the morning on the 24th, which was Wednesday last week. Yeah. I said that we need to be short this area, and then this is the move when we move it back into time where we're at. This is kind of the first move that we really want to see happening, and that is working very well. Now, I wrote here that there was a lot of reasons why, and this is not... I basically copied my Bitcoin idea from the 23rd, last Tuesday, on there, because these are a lot of the same things happening. So again, to review, what do we have going on here? I wrote that there are rare events in the markets where you get a smashing of multiple time frames into a small area. These kind of confluent zones cause historical changes in trend and movement in markets, and sometimes those confluent zones of time affect only a particular instrument. So sometimes it affects only a certain price chart. But sometimes they affect an entire sector, and then sometimes those confluence of time zones affect the entire financial market system. So every tradable instrument becomes affected by a major crashing of time cycles. So important periods we've got coming up. January 26th, this was for Bitcoin only, or in cryptocurrencies, but we had the expiration of the CME contracts. Sorry, I need a chair here. My stool. Use a standing desk. And then the 29th, that's today, that is the end and beginning of a major time cycle for every cryptocurrency, but also for everything. There are the most traded cycles are the 47 to 49 day cycles, the 64 day, 32 day, 16, 8, and 4 day cycles. But all of those longer cycles end and begin again today. So everything's kind of back in rhythm together. And this is where, if you think of it like music, it's like a page turning. So there's either going to be like a key signature change or a rhythm change where everything kind of reverses what it was doing, or it's going to have a paused continuation and a build up again. The most likely scenario is a reversal, especially for items that are at the market lows. And I'm going to get to why that is here, because on the 31st, that's Wednesday, we have a new cycle, a new moon cycle, not a new moon, but a full moon. If you've ever heard me talk about the lunacy cycle before, or if you think it's dumb, or you think I've got a tinfoil hat on, or tarot cards, or chicken bones, I want you to pay attention. Let's use the euro. Now, those of you who have seen this, it's nothing new. If you've not seen this, it is new. This is one of my favorite things to show people. But Gann talked about the moon phases being responsive areas for price movement and humans in general. So a full moon means that it's bright outside, and that is what's on the bottom here, these full moons. Okay? And hold on, I gotta write a little idea here. Okay, so a full moon, we've got a bias where if it's at or near a market low during this cycle, then we buy it. And that new moons, when there's no moon, new moon means no moon. New moon means it's just pitch black outside. A new moon means that we are at or near market highs and we have a high probability of shorting. Now, does this play out every single time, every 2 weeks? No. Does it happen a lot? Oh, yeah. So, did it work out here if we would have gone long? If we had a stop tolerance? Sure. That's the other thing about moon cycles. They don't happen exactly on the day. Sometimes they will move a week before or a week after the cycle starts. So you just kind of got to be, it's kind of touch and go, but definitely it's easier to spot if you know that you're at a swing high over a 30-day period and you're at a new moon, then you can sell or go short. So could we have done that here? Yes, that would have worked out nicely. That would have been from 110.27 down to a low of 300 or so pips. And then this long here wouldn't have worked out. This short here definitely wouldn't have worked out. But this long here would have, if you would have bought at 107 and then sold or gone short at 114.6, over 700 pips, gone short at the open of 114.4, and you went down all the way here. That's 600 pips. I mean, obviously hindsight is 2020, but you can see though that this trend plays out very nicely for the most part. And you can observe that in bear markets, you're going to have a higher chance of shorting your highs panning out than you will your lows. If we look at let's look at the Euro trade of 2017, where we started our bull move. So we are at a market low. We bought it. Good. And, okay, now if you know you're in a bull market, I hate my stool. It just keeps automatically falling down on me. So if I'm getting shorter and shorter, it's not me slowly kneeling down. It's the stupid stool. I just need to get rid of it. Okay, so if we had bought here, well, I was saying, like, if you know you're going to be in a long-term bull market, looking at your trend lines and your oscillators on a daily or weekly period, then what you can really do, or if you're like trading Bitcoin, is and on your 2-week periods, I just buy these full moons and then sell and go short and wait it out for 2 weeks. So buy, sell, hold off, buy, sell, hold off, buy the bottom, sell, wait 2 weeks, buy the bottom, sell, wait 2 weeks, buy the bottom, sell, wait 2 weeks, buy the bottom, sell, wait. I mean, you can see there is a strong probability of these things working out. We just keep moving here in the euro. The same thing. What do we have coming up in the future? We have coming up on the 31st. It's that new cycle. It's a full moon. Not only is it a full moon, but this is something that hasn't happened in 150 years, since 1866, is that we have a blue supermoon that is a total lunar eclipse and also a full moon. We haven't had a whole collection of those things happening. Now, the fact that it's a full moon with this kind of event in Gann's look is kind of moot. Any long-term trending market that is going to face a total lunar eclipse and that has been in a clear trend is going to show either a large pullback before a strong continuation, or it's going to be the sign of a large reversal. And again, you kind of have to review what is the difference between a reversal and a pullback or a retracement. Because some of those words are used at the same time, but really it kind of boils down to volume. A retracement or a pullback is a sell-off off of highs or lows. So if something's moving up on a high, like I put this trade in on the 27th. This is based on the weekly chart. So if something is going to, on the weekly chart on the Aussie dollar, this is just this stair stepping up with this increased volume is just indicative of a wanting to sell the crap out of that soon. But if we're looking at like the euro, so a pullback is going to have lower volume as price goes down, where a reversal is going to have, you're going to have a bunch of increased volume as price goes down. You're just going to see it large engulfing candlesticks. You're going to, that's the other part. You want to see large volume, long candlesticks, long wicks. You don't want to see indecisive candlesticks like dojis, haramis. You don't want to see indecision. Indecision on price, volume, and candlestick pattern when it's going the opposite direction of the previous trend just means that you're in a pullback. But if you start to see monster volume on the opposite direction, then that is a good sign that you are in a reversal. All right. So what's considered volume for reversals? That's going to be volume that's above average. Ideally, the volume is going to be above the previous trading week, possibly. But as long as it's above average, then we can bank on it being a good sign of a reversal. So that's the kind of activity we want to see going forward here. Again, looking at the Aussie dollar, let's review our trades one more time this morning. So the dollar yen, we're still looking at, we only want to go long once we are above and holding the 109.57 area. So we want to be above here. Again, this Gann, that's not a Gann angle, that's a long-term trend line. Really want to trade above that. We want to get some positive angle here. Look at this chart for that. We really want to get back above there. And then, so that was our yen trade, the euro pound. We want to see, we want to short at a hold and a trade below the 87.70 area. I should also say that this is a strong support zone. So there is a bias for long, but I mean, this was a cup and handle formation, but not a lot of activity to the top. We could see a head and shoulders formation pan out here. Where are you at? I have been drawing so many of these lately, and I do not like to trade them, but damn it, they are working out a lot. The positive expectancy of these lately is just disgusting, and I'm really frustrated by that. because I have a bias against them, and having a rooted bias in the market is a bad idea. But I'm human. Okay, the other trade we have is the gold trade. The short at looking to be short between 1336 and 1331. Right? Is that 1336 and 1331? Yeah. We want to be below this area to go short again. It's night. We looks like we are having a nice. This area may break. That'd be cool. That'd be really nice to have that break. All right. Again, a lot of people will draw. I need to stop saying that again because I didn't talk about it for a long time. But a lot of people will draw these arbitrary support and resistance lines based off of these tops or whatever. But those are not healthy. Just drawing support and resistance lines because they have been zones that have been tested doesn't always mean that those are going to be the highly traded zones. That's why harmonic areas are the most important. They are going to show you the real health and the real rhythm and heartbeat and DNA structure of a price chart of a particular instrument. So these arbitrary lines are not very useful. I shouldn't say arbitrary, they're just subjective. It could be they're just really subjective. All right, then our other trade is we have the euro short at we want to be short at 123.68. Where we were, yeah, that's fine. That's still going and good and active. Again, the dollar, we want to be long above that 109 area. And the Aussie dollar, we're looking at a short at the 808. We want to get that price down below there. And the pound dollar, we want to be short at 141.55. Short idea. That's the short idea from Friday where we're continuing to hold. So, there is, we could also say, break below this older trend line, 140. You know what? Hell, it's a good area to go short right now. Cool. It's a nice one. It could be nice. And the stop, it would be pretty tight stop at 1415. All right, those are the. Oh, let's look at the Bitcoin. Again, I'm just gonna say it above the 7,500 value area. If you are a Forex trader, holding positions for a long time in cryptocurrencies is maddening. I mean, I'm gonna say that trading cryptocurrencies is the most speculative market of speculative markets. I haven't said it lately, but when you're trading anything, you just need to be comfortable losing the money that you have. You should always enter a trade and assume that you've just, like, if you take a half a lot, if you take 50,000 lots of the euro as your basic trade, so I mean, and you have a 100 pip stop, you have to be comfortable with that $500 being gone. I mean, if I put in that trade, I want to make sure that I'm not going to freak out when it goes against me, or I'm not going to get super excited when I start to make money. When you enter a trade, the art of getting successful at trading is not about finding the right entries. It's not finding the right system. It is all about your psychology and your emotional state when moves go against you, how you respond to the loss of your own money. And so if you have already determined to throw away the money when you put in a trade, then when it goes against you, it shouldn't bother you. The only time that you will get upset or fearful is when you have not determined that that money is gone already. All right? If you have an account balance of $1,000 and you're willing to risk 50 of it on a trade, just assume that trade is gone. Just let it go. Don't adjust the stop any lower. Keep the stop there. If you have to move it up because you're in profit, that's cool. Never move it lower. But assume that that money's gone already. Assume that you've already lost $50. When you actually do that, when you get into that mindset, then no trade is scary anymore. And I'm really serious. That sounds so easy to do, and it's not. Trading is the hardest thing that I've ever done, and it's one of the hardest things that I think you could ever do, because it is antithetical to human behavior. Because in order to make money and be successful, you have to do things that put you in psychological harm and emotional distress. You have to risk something that is very important. There are a few things more precious than money, and that's not because we're greedy. It's because money is what we use to keep a roof over our head and food in our stomachs and clothes on our back. So don't treat trading like a hobby. It's a career. And don't let trades become the victim of you. So when you are entering a trade, make sure that you have already determined that that money is gone, that it's history. All right? I mean, the worst thing that you can do is enter a trade and hope that it makes you money. That is a horrible way to trade. That is a surefire way to lose. I'm telling you from experience, I had a horrible time becoming profitable. It was very trying, very hard, and it's not easy to become good at this, but I'm getting preachy here when I should be going over these trades. So again, Bitcoin, I put in the idea that, really anywhere long above $7,500. Ethereum, anywhere above 750. And Litecoin, anywhere above 60. Again, cryptocurrencies are going to be less about short-term swing trading and more about adding to your positions, because cryptocurrencies are still babies. They have not been around very long, and I want to show you this real quick before I get too long in my discussion here. But this red line, if I go to the daily, why does it cut off? That is odd. Okay, but this red diagonal, oh, I know why I did it. But so there is it's called a birthday angle. So the very first day that Bitcoin started trading on the open of its first trading day, starting at the 0 line, this is a 45-degree angle from there, okay? Now, what that means is that anything before price can even be considered a tradable instrument, or that it's actually entered its first bull phase, it has to start trading above this 45. Anything else is just a consolidative period. This is just an accumulation phase. This is nothing. In the large scheme of things, this movement doesn't mean anything. I know that sounds weird because you're looking at something that costs $11,109. That used to be $20,000, but I want you to look at this real quick. When Bitcoin made its all-time high on the 7th of December at 19,697, it was stopped and rejected right on this 45-degree angle. All right? When it went higher and it went to 19,891.99, it was again rejected right at this angle. So Bitcoin has not yet actually entered its first bull phase. It's still in an accumulation phase. The only major that has is Ethereum, and that's where this blue line is. This blue line is Ethereum's birthday line. It goes from its opening date at price line 0 all the way to where it is now. All right? So Ethereum is the is the only major coin that is actually in its first bull phase. Okay? What this means is that as we go forward in time, this 45-degree angle represents the new ultimate zero line. And that crossing it would mean we have entered into a very strong bearish environment. But for right now, Ethereum, and in some respects we should consider Ethereum, like really one of the leaders of all cryptocurrencies, then we could say that Ethereum is leading the pack as far as structure. And that means that we finally entered into a bullish expansion phase for not only Ethereum, but all cryptocurrencies. Litecoin is still well below its birthday 45. So really anything that is below, you got to think of it this way. Ethereum has the least downside risk, but it has it can easily go above its ultimate highs right now. But Bitcoin and Litecoin have the most upside potential. All right, they have the most opportunity to move and create larger percentage gains on their current areas than Ethereum does. All right. So, anyways, those are the trades for the day. Just reviewing these. Gold's doing this. Euro's falling down. Dollar yen is farting around. The Aussie dollar is farting around. New Zealand dollar is falling a little bit. The pound dollar is just doing its thing. Euro pound, that was a nice little move off of that. We'll see what happens. So we've just got a lot of nice little movers happening. We'll see what happens when we get closer to the afternoon when the Euro session ends. So again, trade safe, trade smart, trade wise. Don't trade scared. Don't trade excited. And hope you all have a great start of your trading week. Have a great Monday, and we'll visit with you tomorrow. Bye-bye.